Good evening, everyone. Welcome in joining our live sharing session tonight. Here, I am going to share with you some foundational knowledge and practical trading experience on how to profit in the stock market. And we will further share advanced concepts, strategies, and more with all of you here. The stock market is a place full of opportunities and challenges. It is not only an important channel for corporate financing, but also an effective way for investors to increase wealth. However, facing the complex and ever-changing market environment, making wise investment decisions is a topic that every investor must face. Therefore, understanding and mastering the basic knowledge of the stock market, learning to analyze and judge market trends becomes especially important. The stock market can indeed be a place where investors achieve success and even achieve financial freedom through your own personal efforts. You may not have a strong background, nor extensive social resources, or even a top-notch education. Of course, not everyone can become Warren Buffett or George Soros, but achieving personal financial freedom is still possible in many cases. Of course, achieving it through solo efforts is also possible, though it may take a lot longer. So, how do we choose a team? How do we choose individuals or organizations that can help oneself? This is crucial, as making the right choice can significantly shorten the time you need to strive. Undoubtedly, many times, choice is greater than effort. So once again, thank you all for coming. Looking forward to spending a fulfilling and meaningful learning experience time with you all. Now let's officially begin today's session. So we're going to be going over the contents with everyone here and the topics that we're going to be going over this evening. Now, besides the regular market analysis, tonight I would also like to talk with everyone here as individuals in the market and as ordinary investors. Each of us surely harbors a dream, whether it is to achieve our own wealth goals or to attain financial freedom. Having a vision alone is not enough. So how can we achieve these goals, these dreams of ours? So I'm going to be talking about to you all about this topic. Now, of course, achieving wealth goals is not something that happens overnight, but rather a process that requires wisdom, determination, and perseverance. Wealth accumulation is not just about money. It also reflects your wisdom, your insight, as well as your courage. Every pursuit of wealth is a journey of self-transcendence and growth. You have to believe in yourself. You have to set goals. You have to continue to keep learning. You have to stay positive, and the doors to wealth will open for all of you here. So let's work towards these goals. Each and every one of my fan base, my members, can achieve their wealth dreams. I will discuss a little bit more on this topic and in detail shortly. So let's continue to go over the contents for this evening. We're going to wrap it all up with some stock analysis. And as you know, we always do the macroeconomics as well as the market recap of our Nifty 50 and Sensex. Okay, so we've kind of flipped it around. So we're going to be doing news first now. So tonight, we're going to continue to analyze and share some of the major news and financial data related to the fundamentals of the stock market. Now, of course, these fundamental news and data mainly focus on macroeconomic aspects rather than the fundamentals of each stock. By analyzing the macroeconomic environment, the industry prospects, and etc., we can make longer-term market opportunity predictions and even make strategies ahead of market changes. Now, of course, this kind of analysis is relatively difficult for ordinary investors, and there are so many subjective judgment factors involved. After all, this is not a study in natural sciences. Most of the time, we just need to grasp the key points and combine them with other analysis methods to make a more comprehensive evaluation. So let's continue to look at some more specifics of the news tonight. All right, so let's take the look at the first one. It is going to be about the United States. So the Fed remains cautious on cuts even as data improves. Now, last week, data brought some good news for the Federal Reserve in two aspects. But policymakers have not publicly changed their view that investors are confident that interest rates will start to fall later this year. Now, comments from Federal Reserve officials, including John Williams, Vice Chairman of the Federal Open Market Committee, responsible for setting interest rates, and President of the New York Fed, acknowledged a positive shift last week. U.S. government agencies reported that in April, the consumer price increase was slower than expected, and the growth rate in the retail sector was lower than expected. So spending this month has not increased at all, which may indicate consumers are cutting back on their expenses. Now, this has not prompted policymakers to make any specific comments on when interest rates might decrease, indicating, as Federal Reserve Chairman Jerome Powell did earlier this week, that while the baseline outlook for declining inflation still exists, they are not entirely convinced of this 3 months from now based on disappointing inflation data. The data flow between now and the upcoming Federal Reserve meeting leaves officials with a narrow time window to establish reasons for a rate cut before the meeting on September 17th to 18th, which is currently the most preferred opportunity for investors to bet on contracts related to the Federal Reserve policy. From now until the Federal Reserve meeting on June 11th to 12th, policymakers will only receive an additional report on personnel consumption, exponential price index, which is used to set the 2% inflation target. If data continues to show declining inflation, policymakers may revise the policy statement that has long cited rising inflation. So analysts say this change is necessary to open the door to the rate cuts. So after the July meeting, the annual Federal Reserve Research Conference will be held in Jacksonville in August, where the Fed chair often uses this forum to shape public expectations on monetary policy. However, the International Monetary Fund warned the Federal Reserve on Thursday not to act too early, indicating that inflation remains a top issue in global policy debates. So as I shared with you last time, even though the data has improved and technically the US stock market has indeed broken upwards, there can be various trends and possibilities after the breakout. So therefore, for ordinary investors in the market, it is not advisable to be overly optimistic for now. So the best thing we can always do is just be a little bit cautious ourselves, right? Let's wait. Let's look at some news, see what kind of direction, and then we can make our move. Okay, so next piece of news. India's spike in trade with Russia is not a temporary phenomenon, says the foreign minister. So the Indian foreign minister said on Friday that more economic opportunities emerged. The growth in India-Russia trade should not be seen as a temporary phenomenon. India and Russia have had a close relationship for decades, with New Delhi refusing to condemn Moscow's invasion of Ukraine in February 2022 and urging both sides to end the conflict through dialogue and diplomacy. Since Western countries imposed sanctions in response to the war and stopped purchasing, New Delhi has become one of the largest buyers of Russian seaborne oil, which Russia refers to as special military action. With the country turning towards the east, new economic opportunities are emerging. Our surge in trade and the new areas of cooperation should not be seen as a temporary phenomenon. As the fiscal year ending in March 2024, the trade volume between India and Russia reached 65.7 billion US dollars, an increase of 33% from previous year. Now, New Delhi is seeking progress with Russia on investment treaties and is aiming to sign a free trade agreement with the Moscow led Euro-Asian Economic Union. The current international situation is constantly changing. Even though we are in a rare upheaval that only happens once a century, as more economies are tied to regional conflicts around the world. It is actually a great opportunity for India's development and rise. Risks and opportunities coexist, and the current world order might pose risks for some economies. But for India, it presents even greater opportunities. So of course, the same goes for individual investors as well. Historic opportunities and chances are right in front of us. So how to seize this moment and achieve personal wealth goals in the most important issue that investors should consider at this moment. Now, although the Indian market has been in a bullish trend recently, the selling by foreign institutional investors, which we call the FIIs, will still have adverse effects on the markets. So FPIs, our foreign portfolio investors in the Indian stock market, became aggressive in selling in May, partly due to the strengthening of the US dollar, inflation, especially in the food sector, and anxiety related to the results of opinion polls. With 8 trading days left in May, the latest data shows that foreign investors sold Indian stocks worth 35,625.42 million Indian rupees. The only good news is that FII started net buying stocks last Friday. So currently, it is not clear whether FIIs have begun a strategic change in trading direction or just short-term intervention. This needs further observation. In April, FIIs were also net sellers of Indian stocks as ongoing geopolitical crisis in the Middle East could prompt investors to withdraw capital from their portfolios. There are also reports that the main trigger for FII sales is the excellent performance of the Hang Seng Index in Hong Kong, which has risen by 19.33% in the past month. FIIs are shifting funds from expensive markets like India to cheaper markets like Hong Kong, where the PE ratio is around 10, while India's PE ratio is around 20. However, PE, which stands for price to earnings, is not so criterion for stock purchases. When market profit expectations are very positive, investors are willing to give higher valuation to those higher quality stocks. So looking ahead, FII stock flows may undergo significant changes due to the election results, because political stability will attract a large influx of funds. So as I mentioned earlier, FIIs started net buying stocks last Friday. Currently, it is not clear whether FIIs have started a strategic change in the trading direction or it's just an intervention short term, right? The continuous selling FIIs in short term does not bring gloom to the market. However, in the long run, the market will always develop in a positive direction. Keep in mind, the domestic investors are growing as well. Okay, so we just went over a little bit of the news. Now I want to review the performance of the domestic stock market in India today. Now, compared to last week, the overall increase in the domestic market in India today was not as significant, which is relatively consistent with the overall performance of the international market. The special feature of the market today is that there was a significant drop at the opening in the morning, but we managed to rebound very strong, which is considered a decent performance from this perspective. After the start of the week, the Indian stock market has been in like lukewarm waters overall. Today's upward momentum mainly came from the strong rebound of energy and metal stocks, even pushing the index up at the close. Overall, whether it's the Nifty 50 index or the Sensex index, due to significant rebound last week, although they are in the process of rebounding, the upward potential in the short term may not be large anymore. So this week is likely to lean towards a week of volatility. So what do I mean by that? Week of volatility. let's dive in and take a closer look. Okay, so first we have the Nifty 50 graph here. Now, I briefly introduced the general trend of the index just now. Typically, a situation like today's index trend is often referred to as relatively strong. But from my personal point of view, such strength is not worth getting excited about. Now, why do I say that? Right? So, on one hand, due to the significant gap down in the morning today, although there was a large increase from the low to the high during the day, compared to the previous trading day, the increases are not very significant. Additionally, although there are some funds buying on dips during the day, the force is not strong enough. Now, on the other hand, due to the large increase in gains last week, the bullish force is overextended. Even if it continues to remain strong this week, the increase will not be too significant. From a technical perspective, the previous week's rebound in the Nifty 50 index was mainly due to the failure to effectively break below the support of the uptrend line, leading to its rebound. Now, since it did not break down effectively, it shows that the support at that level is relatively strong. So the upward rebound is a normal phenomenon, in just that last week's rebound was relatively significant due to the support from the US stock market. We should also take note, a phenomenon that current index price has rebounded to near center of the uptrend channel. So technically, there will be some technical pressure here. The index started to fall after 1 p.m. this afternoon. Perhaps that is related to this. From a fundamental perspective, this week should be slightly better. Although FIIs continue to sell Indian stocks, and it is uncertain whether this trend will continue further, the domestic election situation in India should be more stable, and the concerns about election uncertainty in the previous period should gradually disappear. As for the US, there are no particular important data to be released temporarily regarding Iran. The country is currently observing a 5-day mourning period. So there shouldn't be any major changes, at least within these 5 days. So therefore, fundamentally speaking, things should be relatively calm. So overall, this week's market volatility may be dominated by technical trends. All right, now we're going to be jumping into our Sensex index. Now, this index is quite similar to the Nifty 50, of course, with the only difference being the upper channel of the index, Sensex index, is narrower compared to the Nifty index. However, this does not affect the trend's direction. Since the chart of the Sensex index similar to that of the Nifty index, but with slight differences in details, such as Sensex index, the highs of the past 3 trading days are close to horizontal, indicating some selling pressures above. The trend is relatively weaker compared to the Nifty 50 index. So tonight, we're not going to analyze the technical aspects of the Sensex index. I would like to focus on discussing what actions should be taken in the current market trend. Now, many of you may know that besides analyzing the market, normally I pay more attention to the questions, what actions should we take in the market? Now, regardless of whether the market goes up or down, it has already happened. We cannot change the results. So therefore, thinking about what actions to take can be more beneficial in formulating relevant trading strategies later on. So what should we do in the current market? What kind of strategy should we adopt? So regarding last week's rebound, the upward breakthrough in the US stocks has greatly supported the rise in Indian stock market. After such a significant increase in the Indian stock market, should we continue to buy ordinary stocks? Now, my personal opinion leans towards maintaining a strategy of selling on rallies rather than buying new ordinary stocks. Today, that's exactly what we did. Now, why do I persist with this view? So firstly, the current rise is merely a rebound and still within the upper channel. It does not indicate a start of a new uptrend, so its sustainability is questionable. Secondly, both strategically and theoretically, selling stocks during an uptrend is a very good selling strategy because by using this strategy, you can never go wrong. At most, it's a matter of how much more or less money you make. So, do you all understand these points? As we are currently involved in block trading, are we lacking opportunities to make money? Definitely not, right? So the above is a comprehensive analysis of the Nifty 50 and the Sensex Index, as well as the response strategies for the near future. I hope this information has been helpful to everyone here. On to our wealth growth plan. So, dear members, friends, as you all should know, our wealth growth plan has entered a new stage. To ensure that everyone's profit increase quickly, more members join our wealth growth plan and the asset management industry grows in our Indian region in an orderly manner. You should also be aware that you have been in contact with related institutions recently to discuss the pertinent details of our cooperation. So, spending even weekends working on this. I have always mentioned before the high quality resource is in the market have always been relatively scarce. Just like the block trading stock shares, it's not about buying any stock you want or buying as much as you want. After this intense negotiation period, we have indeed obtained more shares and more competitive trading targets. Now, I can tell you that tomorrow there will be a stock with a larger discount rate, and arrangements will be made for everyone to acquire corresponding shares, which also means higher profit margins. Of course, after tough negotiations, we have also obtained more purchase shares, and we will open the purchase shares to everyone at that time. So, as you all may know, with gain comes some losses. We have obtained such good conditions, but from now on, we cannot guarantee to have sufficient shares every day. So regarding this point, I hope everyone can understand. As for how many specific shares will be available for purchase tomorrow, I estimate that it may not be much. So people who want to participate in the trading, please contact my assistant in advance to make an appointment to report and purchase shares. Here, I want to reiterate once again, as I've always said earlier, anyone participating in our wealth growth plan, whether you're old members or new members, we will all be treated equally, and we ensure that everyone can earn corresponding and sufficient profits. So there is no minimum threshold for tomorrow's block trading purchases. Everyone can buy it, but of course, contacting the assistant for an appointment in advance is definitely necessary. All right. So in the past week, we have also achieved quite good profit performance. In total, we made around 57% profit over the 5 trading days of last week. Now, did everyone also earn such a profit margin? I have mentioned before that we're currently in the process of accumulating funds or capital. This accumulation of funds is very important, as you all know, in order to earn more money. Given the same profit margin, we need to use more capital to earn more returns. The more principal you have, the more you can earn. Simple principle. And I believe everyone can easily understand that. So therefore, recent profits are indeed very important matter. This is also one of the reasons why I've been engaging in more external negotiations recently. So I'm pleased to say that we have achieved some results in the current stage of negotiations. At least by tomorrow, we can open block trading purchases to all members, and the discount rate is relatively high. Although we achieved good profits last week, as an ordinary trader facing such a profit margin, I believe this is very high profit. However, we are currently in a stage of comparing asset management scales. This profit margin is not going to be enough. So therefore, we still have major projects in preparations. What everyone needs to do is, at this stage, is follow us to make money and further accumulate capital. Can everyone understand this point? So I want to emphasize once again that during the trading process, everyone must follow trading instructions and other relevant arrangements. Although the execution ability of everyone has shown a significant improvement in the past 2 to 3 trading days, it is still not enough. What we need is absolute strict execution. Only when everyone's execution is in place, our trading can become smoother, further executing the next stage of the wealth growth plan. Now, regarding the content we just discussed, if anyone still has any confusing points or some things that they're unclear about, please feel free to consult with my assistant further. So, although our current wealth growth plan has a profit target of 300 to 500%, and within our wealth growth plan, making money is relatively easier for everyone since a lot of work has already been done in advance. However, as we all know, our wealth growth plan only happens once a year and it lasts for around 2 months. So, in the grand scheme of our investment careers, this is far from enough. So, in our day to day investment activities, what are some methods for ordinary investors in the market to achieve wealth goals? Are there any fundamental principles that can learn from or to follow? So, this is what I'm going to be sharing with you all next. Ways to achieve your wealth goals. Now, in today's fast changing world, many people still have insufficient understanding of wealth and how to grow it. Some even consider saving and earning interest as the only means to preserve and increase wealth. Now, let me make it clear to everyone that this is a very primitive and even a mistaken method from the perspective of modern financial management. Saving money in a low interest era is equivalent to losing money because not earning or earning little is as good as losing. We can't even beat inflation, right? So why is that? Because in a low interest era, storing too much money is essentially losing the value of money over time. A low deposit interest rate is not suitable as a long-term investment tool as it does not generate compound returns. Excessive savings waste resources due to a decrease in purchasing power and a decline in real returns caused by inflation. From an economic standpoint, the earlier you utilize your money, the more valuable it becomes, resulting in greater economic profit. Now, you may deposit money into the bank for future use, but delaying enjoyment actually diminishes it, especially in an inflationary environment. So, in particular, in modern society, the inflation rapidly reduces the purchasing power of your wealth. Take the example of the US dollar. The purchasing power of $1 million today is incomparable to that of $1 million from 10 or even 20 years ago. So, even with added interest, right? So let's take a closer look. Using the example of the Indian rupee, think about it. Can 100 rupees in your hand today compare with the purchasing power of 100,000 rupees from 10 or 20 years ago? Obviously, it cannot. So why do we say it is a low interest era now? It may seem like the current interest rates in India are decent, so why it's low interest era? Is it really the case? Okay, so let's take a look at this chart showing the interest rate trends in India over the past 20 years. Around the year 2000, India's interest rates has reached about 15%, which now seems like a terrifying rate, although the period of enforcement was relatively short. But have you noticed over these past 20 years, the interest rates have been on a declining trend, with the peak values gradually decreasing. Now, additionally, I've been constantly sharing macroscopic market news with everyone. So don't just focus on the current interest rates exceeding 6%. So for the Reserve Bank of India, the next step is to consider rate cuts. The same goes for the US. Recently, haven't we been closely following this topic? So I can clearly inform that many economies around the world have implemented a zero interest rate monetary policy, including important economies like US and Japan. And isn't the US also waiting for an opportunity to cut rates? So once inflation data continues to decline, I believe the US will soon enter another interest rate cutting cycle, possibly returning to the era of zero interest rates. But do you still harbor illusions about preserving and increasing wealth through deposit interest rates? Now, some people may not have deep understanding on this matter, so let me give you an example. Suppose you have $1 million in cash, which could buy you a house 10 years ago. Now, after 10 years, even the interest accrued on the 1 million, can you still buy a house today? Of course, this 1 million is just a number I used for visual illustration. I believe most of you have the answer in mind. What was worth 10 years ago is definitely worth a lot lower now. So this is the first important lesson that we got to go over when we want to achieve our wealth goals. All right. So we're going to be taking a look at the second point now. And it is money only has value when it is used. It can make wealth appreciate. So appreciate means to go up. So people who save too much are conservative and risk adverse. In fact, not taking risks itself is a risk. So let's take an example of the Nobel Prize in 1896. Alfred Nobel donated 3.1 million Swedish kroner as the original fund for the Nobel Foundation. In the year before his death, 1895, Nobel wrote his will mentioning his hopes to invest in safe securities in early days of the Nobel Foundation. Now, following Nobel's will, the fund was only used for investing in safe securities, which meant the fund could only invest in bonds and loans domestically and internationally. When the Nobel Prizes were first awarded in 1901, each recipient could receive 150,782 Swedish kroner. Now, as Nobel wished in his will, equivalent to 20 years ago salary as a professor, with the intention of allowing the winner to focus on research for 20 years. However, the amount of the prize money fluctuated over time, and it did not escape the impact of inflation, when its value dropping to almost 30% of its initial value at one point. In 1919, the actual value of the prize money was only 28% of that in 1901, the lowest in history. By 1950, considering inflation, the overall size of that fund had shrunk by nearly 60% from the beginning. So it is worth mentioning that in 1945, the nominal value of the Nobel Prize money was 121,300 Swedish kroner. But in terms of purchasing power, it was only about 29% of that in 1901, decreasing by over 70%. That year, the discoverers of penicillin, Alexander Fleming, Florey, and Chain were awarded the Nobel Prize in physiology and in medicine. And they had to share the prize money with the most significant decrease in purchasing power. Now, the honor was undeniable, but when calculated, the money was only enough for each of the three professors to have 2 to 3 years' salary, which was far from Nobel's original intention. So you see how much of a difference it makes over time. The money isn't worth as much. Even though it's the same amount, it's just the money's value is slowly going down due to inflation. Now, the above examples previously we just shared illustrate the significant impact inflation on purchasing power of money. If following Nobel's will, the funds might have been exhausted by 1950s. So therefore, with the permission of the Swedish government, the Nobel Foundation also began investing in real estate and stocks. By 1993, the total assets of the foundation had exceeded $200 million. Since 2012, benefiting from overall good market performance and effective asset management, the annual return on investment for the Nobel Foundation has been close to 9%. So did everyone see that? Money only has value when it is utilized, and the importance of making correct investments can be seen. Otherwise, you might just watch it rapidly lose its value. So this is very important. If you were to just hold money on forever and not let the money work for you, you're going to be gradually losing money. As I've shared with you, 150,000 now and 150,000 maybe 15, 20, 30, 40 years ago even has quite a substantial difference. So keep in mind, if you are trying to acquire and achieve your wealth goals, you must be able to have the money work for you while you're sleeping, right? All right, so let's look at the third point now. The ability to use wealth is the main reason for the widening gap. So using the power of wealth is the main reason. Now, a sentence from the book Rich Dad Poor Dad, very, very popular book, says, if you want to get rich, look at what the rich are doing and then do it yourself. Now, a survey results has shown 80% of millionaires are first generation wealthy. What does this actually mean? It means that they didn't inherit a lot of money through inheritance or family businesses. 80% of them earn money by themselves, and with most of them being self-employed. They are frugal. They're knowledgeable. They spend less than what they earn. They adapt to managing finances, and they know how to save for investments. So please note that the savings here are meant for investment, not for earning interest on deposits, which is a fundamental difference. Now, this is very important because when you're saving money for an investment opportunity, when that opportunity arrives, you have the funds readily and you execute. That is a lot different than saying, if you're going to put this money aside and if something good comes along, maybe you're going to do it. They already have a plan in mind. They have this money saved up to execute. That is the major fundamental difference. Now, although their incomes may not be the highest, over time, the accumulated net assets are beyond the reach and unexpected for most people, starting from similar points. Now, why is this so? Because these people know how to track, they know how to make money, and they know how to defend to keep the money. Although our current wealth growth plan is about accumulating profits for everyone, our starting point is much higher than those mentioned above. If even they can achieve success and profit, why can't we? The key lies in how you utilize the funds at your disposal and continuously create wealth with them. So from the perspective of wealth growth, earning money through labor is always the lowest level. And making money through trade and through more advanced than earning through labor. It's still not enough. Only when money makes money, using your existing funds to earn more money is the fastest and most effective way to make money. Now, of course, I'm not saying that other ways of making money are wrong, but they are generally far behind this method. So I've said that a little bit earlier as well. You want money to be helping you make money while you are sleeping. Okay, point number 4. Don't wait until you have wealth to manage your finances. So for investments with unpredictable short-term and high long-term returns, the safest strategy is to invest first, then wait for opportunities rather than waiting for the opportunity to invest again. Now, procrastination is a major reason for financial management failure. Procrastination is our worst enemy. Many people maintain an acceptable attitude towards financial management, but as they age, they notice others' wealth growing rapidly, which leads to them finally realize the importance of financial management. Now, wealth management must start from a young age. This is common sense. To get rich when young, one must invest when young, and investment should be large enough for compounding interest to work on its own. So the difference between entering and exiting under the effect of compounding interest is actually much greater than you imagine. Long-term investment behavior produces much better compounding effects than short-term investment behavior. So don't wait until you have earned a lot of money to start managing your finances. The lesson of compounding in our lives is set clear goals, start early, and preserve. So this is going to be a cycle that you will always remember. Now, it is a lot easier to start young, but it is never too late to start. So we must set clear goals. We must set a clear theory. We must set a clear strategy. We got to start early, and then we must preserve. That is the key, especially with long-term investments. Okay, point number 5. Investments are risky, but there is no need to be afraid. So in the investment world, there is often a saying that you should not avoid risks. Like futures trading, forex margin trading, bond margin trading, and lottery are all high risk behaviors. When you make these choices, you can actually lose your bankroll, lose your funds. However, one thing to note is that if you want to make money from investment and financial management, do not blindly avoid risks. In the future, the world will become faster and will inevitably accelerate changes across all levels, including business, economy, finance, politics, and society. The redistribution of future wealth will inevitably accelerate. So in the past, you could have lived a peaceful life without taking any risks. But facing continuously changing investment environment in the future, if you do not take risks, you will become the biggest risk. Okay, so example time. Starting in 2003, everyone kept putting money into the bank. Even if you have enough money, not investing in real estate or participating in the Indian stock market, it seems very stable. But think about it. What's the use of such stability? In the stock market, changes over the past 20 years, if it clearly shows that you have no stock market risk at all, it seems risk-free, but that is the biggest risk. The risk of not making money, as we mentioned before. Not making enough money or making too little money is still a loss. And are you willing to accept this loss? So going back to the stability question, if you've saved your money, you avoided all the risk, and you're just slowly tucking a little bit away for the past 20 years, the amount of money you're going to save by the time we arrive here is going to be insignificant. You need to keep the money turning, and you have to keep it working for you. So these are the 5 major points that I'm going to be going over when it comes to achieving wealth goals. That's going to wrap up our lesson. So it's a lot of good content that you could kind of use for yourself, right? So these are the kind of things that you want to capture and memorize as you're going on. Okay, next up, we got stock analysis. So we're going to start, we always track and we analyze the stocks that we recommended to you before. So as I've said before, we're going to follow it all the way to the end, right? So today's market has continued its rebound. Although this rebound seems a little bit difficult, however, the good news is that once again, we took profit from a stock we bought earlier, adding to our profitable record. Overall, very good. So what about the ordinary stocks that we bought earlier that haven't had a chance to exit yet? Why are we always reluctant to exit so early? Mainly because the stocks we recommended to you are actually really good quality long-term stocks. As long as we give them a chance, they will quickly show good performance. And as I said, the stock market is a place where you need patience. Now, as for the stocks that haven't been sold yet, there's no need to worry. Just like today, haven't we already taken profit from one? We have. So furthermore, as long as they are stocks that we recommend, we're going to track them responsibly. We will not ignore them, whether they are falling or rebounding. Rest assured, we're going to continue to track it. We've always mentioned that as long as it's one of the stocks we recommended, regardless of your final profit or loss outcome, if there is a real loss, I will definitely lead you to a quick recovery with the wealth growth plan. Now, by now, these recent block deals should have already covered the original losses from these stocks. Am I right? So let's move to our first stock. All right, so Capacite. Now, I'm going to review a little bit about the background again. So this company is engaged in construction of buildings, factories, specializing in constructions of high rises, super high rises, residential, commercial, institutional buildings. They got super specialized hospitals. They are in infrastructure. They are builders, right? Now, the company's operating performance is very impressive. Whether it's in terms of the company's revenue, its net profit, or earnings per share, they're all showing very good performance. So this stock belongs to the category of good stocks in my books. Now, since the previous price adjustment and the successful bottoming on the 10th and 13th of this month, it has risen continuously for 5 trading days. The speed of the previous downward adjustment was relatively fast, and currently the speed of the upward rebound is also fast. Now that's why the index did not adjust today. Now, while the stock instead underwent a slight adjustment, primarily because of the speed of the previous rebound was too fast. Now, technical chart perspective, it is very likely to form a V-shaped reversal. The candlestick patterns on the 10th and the 13th are very clear at the bottom. The current rebound has reached or exceeded the 61.8% position of the previous decline. Once it successfully crosses this position upwards, there will be more resistance above, directly challenging the previous high. Now, of course, it is not important whether a V-shaped reversal pattern is formed. What is important is how this upward trend will continue and what will happen after today's adjustment. So for this stock, today's high price should be close to the cost price. As long as it rebounds upward again, it will quickly enter a profit state. So I'm going to say holding is still advisable. Now, we've already held onto the stock for so long and we've given it so much faith. This is where the true testament of your patience is really, really going to be tested. So we've already given it so much room to grow. What's a little bit longer? We find a good exit point and then we can make our exit, right? Okay, so jumping into JK paper. So once again, I'm going to go over some of the credentials and a little bit of background about this company. So this is a pulp and paper company engaged in manufacturing and selling branded paper, cultural paper, and packaging board in India and internationally. Now, although the company doesn't belong to your traditional industry of like high-tech companies or like hot sectors, its operations are very stable. Whether it's revenue, net profit margin, earnings per share, all are relatively consistently stable. So the fundamentals are here. There are no problems. It's a great company. Now, as I mentioned earlier, for these good long-term stocks, sometimes they may undergo overall adjustments with the market. As long as the timing is right, the rebound will also be very rapid. Now, looking at the stock during the previous adjustment process, the stock price went to test the low point in April. But just last Thursday, it started to rebound strongly without any warning, even with the closing price increasing by nearly 8%, showing the strength of its rebound. Now, the price of the stock has adjusted today. The magnitude of the adjustment is not large at all. Now, temporarily, not affecting the current upward trend. And after a short-term consolidation, it is highly likely to even challenge the high point, which was at the end of April. Or it may even reach a new high. So for this stock, same thing as the previous stock. It is advisable to continue to hold and wait for our selling signals. So this is going to wrap up our today's sharing about our stock review. We will continue with a little bit more next session. Let's see what happens in the 2 trading days. All right. So that is all for our online session this evening. So we went over some light guidance kind of session this evening, right? Just kind of little tips and tricks to helping you achieve your wealth goals that you personally have planned. These are some of the tricks that you can read over, kind of hone in on what it's really trying to teach you. Now, some people are going to have bad habits. That goes for everybody. So what we want to do is we want to break out of those bad habits and we want to practice the good ones. So please go over the content again, memorize it, maybe every few weeks, go back, look at the old PPTs, go look at your notes, go look at some of your screenshots, and then just review it yourself. Apply it to your real life trades, and you will see a significant change in your trading strategies, trading habits, etc. Right? Now, our next online live broadcast is scheduled for Thursday, May 23rd at 8 p.m. I hope to see you all there again. Thank you very much for everyone here for your strong support, and I will see you all next time.